The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials down 152. You get the NASDAQ off 26. S&Ps are off 14.5. And you talk about fast, furious, all of the above, folks. That's what you have happening out here. And, you know, bottom line is that when you give it up this quick, it's pretty incredible. If we go over and we take a look at the E-minis first, what we have out here is this, okay? So yesterday, bottom line, you know, E-minis go from 71 was the low, 01 was the high. So you had basically 30 points, 30 handles that it went up. This morning, bottom line, you've given back 15 already. And what I expect you're going to see is that, you know, it's going to basically hang here for a bit. What it's doing right now is building cause to go break down under this 81 area. Right now, you're at 84. What we have down here, you know, and really it's just giving up, at this point, it's only giving up 50% of the gains. I suspect when we're all said and done by the end of this trading day, though, we'll be down there about 76. We'll probably be down about 25, which is a big number. There's no two ways about that. Inside the Dow Industrials, bottom line, Dow had the juice in it yesterday. It's given back 157 today. And the Dow, folks, the Dow had gone down the most amount anyway. And the Dow couldn't handle the 579 area, you know, bottom line. And that's where it broke down, you know, in a big way. It broke first July 6th. It made it all the way back, but the second break down here on July 24th was pretty intense. We take a look at the gold contract. What we have with gold out here, as gold goes topside once again, it has the juice behind the move. This is a nice move off the bottom. You've already done 150,000 contracts. Bottom line, it's building cost to get to this 1133 mark. Bottom line, silver. Let's go take a look at silver. What do you have with silver? Silver also had the move. Silver really had the move yesterday. But the volume characteristic is still great today. So bottom line, silver is on its way up to this 1590. Now, what silver had done, silver broke its downtrend that has been out there, though, since May 18th. So silver wants to run to this 1780 level. And the dollar just can't handle higher price. It's pretty wild. But now you can see how this thing is laying out. It's laying out. Bottom line is that it looks like all these currencies are going to get weaker. You know, China devalued their currency. That's the last thing that anyone wants to do. But bottom line, that throws conniptions all over the place. What you are going to have, what you're going to start seeing, if you remember last year, the amount of loans that were taken out, dollar loans, those are going to be big problems now. You know, folks around the world were taking out dollar loans because they thought the dollar was going to be low forever. Well, what has happened is not that the dollar has gone up, but their currencies have gone down and gone down pretty dramatically. TWRT, TWTR, rather, Twitter. Okay, so this, I want to walk you through this because this Twitter, it totally makes sense that they have the best public relations, or one of the best public relations out there because of the business they're in. Now, if you read the New York Times today, I brought this up yesterday in the show, but I really want to walk you through this because this is a heads-up extraordinaire for all of us as to what we read as fact and what is left out. And in this particular case, in both cases, in the Wall Street Journal and New York Times, there was huge articles about Twitter and about Jack Dorsey buying stock in Twitter. And they were laid out. They were really sweet articles, laid out really nice, picture in one of them. Okay, so I'm reading these, right? And I suspect that both writers absolutely know zero about the marketplace. The amazing part was that they're both of course, Wall Street Journal is a business paper, period. Inside the New York Times, this was in the business section. And what the article was about, is that that Dorsey was turning around, buying stock, okay, and had faith in the company, and a couple other folks were buying stock also. And they put that, okay, it wasn't a huge amount of stock that he bought. It was, $800,000 worth of stock. What they failed to talk about, and this is where this was absolutely a public relations type of deal that they scored beyond belief, is that the other co-founder, as Dorsey is buying stock, right, the other co-founder is selling 10 times the amount of stock. 10 times, folks. Okay? And we're talking about the exact same time. Now, I suspect that both of those writers don't have a clue as to, how you look any of this up. But their editors evidently don't either. Because if you're watching me right now on Tiger TV, if you're in your car, I'll explain what I'm looking at. So, Evan Williams is a co-founder with Jack Dorsey. Dorsey buys 31,627 shares on the 7th of August. Well, guess what? On the 5th of August, Evan Williams sells 368,000 shares. So, what is that? That's more than 10 times. Right? More than 10 times. Now, here's the kicker. Williams owns 46 million shares. Dorsey owns 21 million. Bottom line, what is that all about? Bottom line, folks, is that don't even think about touching Twitter. Right? But disinformation in a huge way, and it's omitted information. And you have to absolutely wrap your head around that, because all of us, I think, when you read something, you say, I can just imagine. I remember when I was first in this business, I never could, I can imagine people reading that today say, oh, I gotta buy this stock. I gotta buy this stock. When factually, the one owner is selling more than 10 times the other one's buy, okay? And one owner who's selling owns 200% more stock than the other person. Okay, bottom line, Twitter's in trouble. If we go overseas and we take a look at overseas, the DAX is really starting to get some traction now. The DAX is down 2.7%. And what that sets up, folks, that's going to set up some nasty markets, for us right here. And the fastness of this move south, let me tell you something, is a big number. It's just a big number. Inside the Dow Industrials, strength versus the weakness. The strength inside the Dow is Verizon is up, Verizon is up 68 cents. Walmart's up 75. Home Depot's up 5. The rest of them, they're all in the red. You get ExxonMobil down $1.33. Apple is off $3. Caterpillar is down $1.97. Chevron's off $2.04. Let me just look at these. Okay, so the oil market, we take a look at oil. Oh, man, this is going. Okay, so oil's down $1.58 right now. It's breaking its lows. And we put this on a continuous contract. What you're going to see, okay, we're at 43.40 on the continuous contract. 42.03 was the low that was generated in March, but it's too easy for it to stop there. Bottom line is that 32.40 more than likely is gain. That's where I suspect that's what it looks like it's going to. Bottom line, big numbers. Some of the Dow stocks out here, we got Honeywell off $1.80, Big Blue's off $1.10. You got Exxon. Let's go take a look at Exxon. Exxon. You talk about these oil stocks. Yeah, Exxon's going to break lows, man. Again, whoa, baby. So Exxon, the low is 76.61. The low is he's got 12 million shares, and we're going to do more than 12 million. Bottom line is that we'll see how it cracks into that. But thus far, this thing wants to get some juice on the way down. And what I expect you're going to see here, folks, is that you're going to see an expansion of volume. You know, we haven't got it yet. The NYSE has only done 158 million. The NASDAQ has done 349. So, and let's see. Well, in both cases, that's not a lot of volume on the way down. The SPYs and the Qs, however, have done the juice. You know, we'll see whether that keeps up. But the SPYs have already done 24 million when, in fact, we only did 85 million in 6.5 hours yesterday. And so we're into it by 48 minutes. And you've done some real juice there. If we go take a look at the, let's go take a look at a couple of these gold stocks. We do Franco-Nevada first. Franco-Nevada is down 86 cents, but you basically got to a higher high, and we're going to have the volume out here. We've done 323,000 shares. Yesterday we did 1.4 million. We'll do the 1.4 million. That thing looks like it's going to trade up to $50 right at 42 right now. An Eagle. We take a look at AEM. Same type of setup. You've done 740. Yeah, this is good. You've done 754,000 shares, and you're at it's pulled back 35 cents, but you're actually pushing on that gap, and you're pushing on that gap with volume. Rango Resources, GOLD, same type of setup. 315,000. It'll end up doing $1 million today, and that's what you're looking for. What you're looking for is you're looking for a push over the swings, into the swings that have volume expanded. Dow Industrials are down 157. Nasdaq's off 26. S&Ps are off 14.5. Gold's at 11.05. Silver 15.22. Bonds 10-year 127.24. 30-year 158.17. We're gonna be right back, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Let's take a look at some of the higher volume stocks and see where they stand right now. You have Apple down $3. Freeport McMoran's off $1.47. You get, let's see, Ford is off 30 cents. Verizon is down 89. Chesapeake Energy's off 45. U.S. Steel, where's U.S. Steel? Let me pull up U.S. Steel. I want to see these steel companies for a second. Okay, so U.S. Steel down 155. There's no hope. This is interesting. Oh, no, this is going to be good. Okay, so let's check this out. So U.S. Steel come off the bottom the 22nd of July. As we come off that bottom, it has strength. Now you're pulling back. This is pretty good, actually. Let me pull this back a bit. So now we pull it back in 2 years. 2 years, the stocks got $46 down to $15. I see. Okay, so last month we go to a price point of $15.68. Yeah, it's interesting. So it was testing the lows that were generated out here in March of '09. You know. This is going to be, I'd let this steel pull back a bit, but it looks to me that steel could be on the agenda, meaning U.S. Steel pulls back to somewhere around 1683. That could be a good setup. Let me see if any of these other companies are still in business. AKS, yeah, same situation. AK Steel, same type of situation. You got to let them back down, but bottom line is that when they came off that bottom on the 27th, as that came off that bottom, that broke that downtrend that was out there from last June. You know, so there's some decent action there. No, there's definitely some decent action. We go over to the IBB. The IBB, of course, is all about the NASDAQ. IBB yesterday got to a price point of 376, closed at 371. You're at 370.94 right now. So the IBB, that's building cause to basically get into this high volume swing that's left from Friday. You get another high volume swing at 330. Amgen, AMGN. We take a look at some of these inside it. Yeah, Amgen came off the highs, going sideways out here today. Biogen, of course, got hit 20%, and Biogen can't get out of its way. Celgene, CELG. Celgene's at its highs. It got into the gap. This is interesting with Celgene. So watch this. Celgene, folks, has a gap from 120.83 up to the 130 mark. We got to 125 on that gap. That gap, we're gonna go right back inside that gap again. Do not get, I don't care how much you like biotechs, let the thing get filled. Gilead is down 48 right now. That also has a high volume swing low. So what you're going to see, I suspect, in the biotechs, they'll build a little bit more cause. After they build a little bit more cause, they're going to make a run lower again. And of course, what that does, that puts the heat on the composite, the big time. We go over to Apple. We take a look at Apple. Apple, bottom line, did a counter trend bounce out here yesterday. We did that bounce with 54 million. Now, just watch how this shakes out. We've already done 18 million. Apple's going to show that it's going lower, and you have volume expanding, and they're just trying to get out of Apple. Let's go see if we get any new filings inside Apple. State Street was the seller, but they haven't sold for a few days. So if we take a look at where we stand right now, State Street, now same number. So State Street's the same number. UBS is the same number. It's going to be, the one big one out here, the first time that this shows up is going to be Carl Icahn. He hasn't shown up yet. Now, what happens with Carl Icahn, though, he owns 0.9%. He is not going to have to show up until the actual 45 days after the end of the quarter for filing. So it's not going to be like that. It's going to be quick. What I do want to do, though, GLD. What we want to do, I'm going to go over to GLD and see if we have any new buyers inside that, because what does happen, well, actually, what's going to be interesting is that what's going to happen, 529. So inside the GLD, we also don't have any new buyers, but watch, let me see this for a second. Yeah, it's going to work. Okay, so watch what's going to happen here, folks. Okay, the GLD, of course, is one of the largest owners of gold in the world. But because we just came off this bottom and went from 103 to 105, and the contract actually went, I suspect by the end of today, they're going to have to be buying physical gold in the GLD, and that's going to put some nice buying pressure and a nice floor underneath the gold market right now. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN. Everbank is a member FDIC.
Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have 3M down $1.74. You got Intel down 41. Microsoft's off 73. You got Oxy down 127. Procter & Gamble's up 14. You get Big Blue off $1.17. If we go over to Big Blue, let's take a look at Big Blue because a few of these are getting close to their bottoms, and it's like, okay, you're going to blow out a bottom. And in Big Blue's case, this has been a building cause for quite a while. When you take a look at Big Blue, what you have is that we've been trading. Put this back for you. See. Okay, so Big Blue had gapped away in October, and we're already. I mean, it's already August, so it's almost a year that it's been trading down at these levels. You know, Big Blue had been $186. October, the second week of October, it gapped down to 161, then got into the area of 150. Now, 155 right now. And what we did do is that your first expansion down, you know, off that high on the week of the 20th of July, monster volume. So she's going to go test it. The real key is that does she break down of that 149 area? And if you break down, if Big Blue breaks down that 149 area, you very well could have a monster ABC structure on the way down. Because when you take a look at this on a monthly basis, and this is where the weighting structure also comes into play, folks, meaning inside the weighting structure, in this case, of the Dow Industrials. Because what's screaming out here, it looks to me like Big Blue's going to run down to $94, which is just a mind blower. But that $94 area is the highs of the lows of 2008. You know, what it's done thus far, if you take a look at this, it's already broken where it had some support from August of 2011. Now, it's only broken it by 2 points, but bottom line, it's broken. You know, so it's not going to take much to basically throw that thing over the cliff, particularly because what you have is that from January of 2011, bottom line, anyone that had bought Big Blue is in a losing position. What I thought was really intriguing yesterday was the fact that, oh, look at this. Oh, March 15th. No, this is is that when Warren Buffett was on CNBC, I didn't hear this part of it, but Becky and I think Andrew were talking about it afterwards. They claimed he was alluding to the fact that he might have been. He's the largest owner of a Big Blue, and that he might have been buying more. Well, he didn't buy any more, okay? If he bought any more, it'd have to be claimed because he owns 8.12% of it. But when you hear things like that, this is where you can use disinformation to give you more clarity on what's actually going on. Because when I heard that, I wish I had actually heard his quote, and I was I don't know what I was doing, wash my teeth, whatever I was doing, and I had looked up, and what ended up happening when I heard them talking about it, I says, oh, that's going to be so easy to find out, because I knew that he was the largest owner of it. And, you know, they were saying, well, he might have bought some in the last few days. What happens, folks, is that as soon as a large fund over 5% buys it, let's say that you and I owned it over 5%. We bought it today. As soon as you buy it, guess what? That fax goes over, that email goes over to the SEC. That, guess what? We just bought. We just bought in. That's how it gets done. Okay. So bottom line is that it didn't get done. If we go take a look at these S&Ps a little, we're gonna see some selling here. It's early in the morning, and I suspect most larger, longer folks slightly in shock that the market gave it up so quick. You know, because the way that let me put this on a daily. Okay, so the way that the market traded yesterday, it had lighter volume. You know, the Nasdaq in particular, the Nasdaq basically, you know, that price held. Now the S&Ps didn't get to the high. The S&Ps were given some good information that okay, couldn't handle it. The Nasdaq, however, it was just so close that it almost could have made it, and it didn't make it. And the confirmation is going to be the deal about, okay, do we get an expansion of volume out here today? And if we do, there's not going to be much else that's going to be able to basically hold this market up for the next week and a half, particularly because what you have is that this is where it's a slower part of the market, one of the slowest parts of the market, period, outside of Christmas, because, you know, when people are on vacation, it's the last couple of weeks of August. If they haven't taken a vacation, so if we get an expansion of volume, you can see how hard that's going to be to get an expansion of volume. That brings the probability higher that you're going to get follow-through as we move along. We go take a look at the XLF. Now, the XLF, no doubt, this is what has not fallen apart yet. The XLF, that is hanging up there. We're still at 25.25. You put this on a daily, what you're going to see. The swing high that it's over is the 25.31. You know, it's right there. So we'll see whether it comes under and gets back under that lower range. But thus far, it hasn't. You know, you're under by a few pennies right now. We'll see whether it can get inside of that. And inside the ERK and inside the financials, of course, you know, Berkshire Hathaway, J.P. Morgan, they're all, well, Berkshire has pulled back, but J.P. Morgan is still hanging up at its highs. And it's going to take a further downdraft inside the market in order to get that lower. Alibaba. Now, what's going on with Alibaba, this is really wild, man. Alibaba, folks, okay, was the be-all, end-all, you know, and guess what? It's going to go after its swing low. The swing low out here is 76.21. You're at 78. Technically, you know, this thing was a one-way trip from 120 down to 78. The thing that's amazing, if you read the story about, you know, what they were buying yesterday, they're buying brick and mortar. It's like, you got to be kidding me, man. You know, bottom line is that, and they spent big money. You know, you're talking about $4.6 billion to buy brick and mortar stores. So that seems to me that it's counterintuitive as to where they thought they were going, because when Alibaba went public, the deal, well, I'm not sure whether it's the whole deal, but bottom line is that people were looking at Amazon, looking at the USA. Were they going to come right after Amazon? Well, bottom line is that they're going to be bothered now coming with stores. Last thing you need in this internet era, folks, is stores. The only thing we want with stores is the storage, store all the stuff that you're going to send out. And if, in fact, you can pull off what Alibaba really has pulled off in China, is you have the clients, the sellers, store everything and push it out. You know, bottom line, that seems to be changing a bit, you know, in a huge way. What is it? You know, what's interesting is that grocery delivery. In Pinellas County, folks, they started this about, I guess, 2 weeks ago. Publix did. Now, Publix owns Pinellas County. Great store, but they own it lock, stock, and barrel. They had a firm called Ship It that, you can get an app, and supposedly you're supposed to get your groceries within a month. I mean, within a month. You'd be starving it does, right? Within an hour. Bottom line, so check this out in the papers this morning. The demand was so over the top that they had to suspend shipments over the weekend. Now, the shipment is claiming that they're going to, hire a huge amount of people. But what is intriguing here is that what you do have is that now actual, grocery delivery, if you can remember how many folks have tried to get this thing done, I suspect it's really going to work now, So what does that do? Bottom line is that that gets all of us back just on the phones more, using the phones as a computer. And the more that gets done, I can see how productivity goes up, particularly for the stuff that you don't want to lug all the way home. It's the lugging itself that's pretty amazing. So we'll see if, in fact, Publix jumped ahead of it in our area right here. But you can imagine they probably had to jump ahead of it because they knew Amazon. Amazon has just opened. We have one of the largest distribution. There's 3 of them, evidently. They opened one in the Tampa area. It's about an hour away. But it's a monster. So we also can get deliveries the exact same day, so you don't want to be competing with Amazon. Let's go take a look at Amazon right now. Not that the stock is going to hold up. It's not going to hold up because the whole market's not going to hold up. But Amazon, it's hanging right at that gap. So the last gap on Amazon, that gap was 4. The high of that is 491. 491 to 529. And it got into that 3 days ago. That's gonna close that gap up. And that's gonna be really wild watching that gap close because that is no doubt a monster gap. And with Google out here today, that Google has another gap. Now this could be Google's been on fire, but what you may have out here today is that Google gapped up today. You're 2.3 million. You're testing the 674. And that might be the test, depending on how much Google does out here today. Now, if you're a bull on Google, you need like 11 million shares, and you might get it. You're at 2.3 right now, but if this thing comes in at like 8 million, and you already did the test, guess what? What that's going to set up? That's going to set up a nice trade to close that gap too, and that gap is at 565, and right now you're at 664. So that is a monster number, no doubt. Dow right now is down 152. You get the NASDAQ off 24. S&Ps are off 13. Percentage-wise, that gets you the Dow down 0.8%. S&Ps off 0.6. The NASDAQ is off 0.4, and that's nothing compared to what's happening over in Europe, folks. You get the CAD off 1.4. DAX is on 2.5. Spain's off 0.8. Yields. Well, guess what? Yields are at 2.1 again on our 10-year. That's up 21 ticks. And if we go over to the TLT, we take a look at that TLT, the 20-year bond fund. What you're going to see is that you're 2.4 million shares. Yeah, you're going into 8.2. You're going to have volume. You don't have a lot of movement right now. You're up $1.48 in the TLT. In that gapped higher, but you're pushing right into the last swing high up here at 8.3 million. That high was 124.50. You hit 124.48. You're pushing into that with volume. That's saying, guess what? We have higher prices, lower yields coming at us, and that is with the Chinese selling off, about $150 billion worth of bonds. So as they were selling it off, someone else was buying into that bond market, and they were buying into that bond market pretty good. Let's go take a look at the 3M, some of the larger Dow equities. 3M has been on a one-way route, and these are subtle. It's pretty wild. I mean, 3M off 170 to 150. We'll see whether that can break inside the lower zone, because 146 is the lower zone. When you take a look at this and you put this up, And these lower zones, there's enough equities right now that are close to breaking down to the next floor. And it's not going to take much for one of these large ones to break down. And if a large one, in fact, does break down, that's when you're going to see a larger amount of selling. The reason being is that, you know, you could have a 3M, an IBM break down, and as that breaks down because of the weighting structure inside the Dow, you know, it can take quite a few of them with it, you know, and it will take quite a few of them with it, you know. So Apple itself, once they put Apple into the Dow, that was the curse. No two ways about that. What has happened is that I believe since they put Apple in the Dow, and this always seems to happen, every stock that they seem to put in the Dow, it seems to take a huge hit first before it ends up getting to higher price. You know, so we'll see where that shakes out with Apple. But it was intriguing last night in China because I know Apple's really not getting hit that hard for the amount. There's a couple suppliers that got hit big, you know, last night in Taiwan, actually, in Taiwan. Then there was one of their suppliers, though, that made a lot of bread. There's no doubt about it. With the Chinese devaluing their currencies, though, that bottom line is going to do. That's going to help the companies that are working for Apple in China. That's what it comes down to, because I suspect that they, more than likely, yeah, they'd be getting paid. There's no way the suppliers would be getting paid in U.S. dollars, and they're selling. I mean, their expenses are going to be in, you know, renminbi. So, in that particular case, what ends up happening is those suppliers should end up making more money. Dow Industrials right now down 156. You get the Nasdaq off 25. S&Ps are off 14.5. You stay right there, folks. Coming right back. Oil is getting absolutely smoked. It's down $1.77, 43.19. Maybe we'll see $42 today. Right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And folks, as you come over to our website at TFNN, you're going to see right on the top of the carousel, free webinar, book, Tiger's Den, When You Act Now. What that's all about is that I'm going to be doing a workshop tomorrow night, 5:30 to 6:30 for my subscribers to Market Insights. You can be a subscriber right now, test drive it for a month. When you test drive it, you're going to get the Art of Time in the Trade, the Tiger's Den, and the webinar. What the webinar is going to be about is setting up 6 trades, 2 long, 2 short, and 2 option trades. So it's going to get really intriguing, man, because we have a market for that. There's no 2 ways about that. The real question is, bottom line is that which way are we going to be going, and which day are we going to be going? Some of these equities, you talk about getting smoked. So check out a few of these. Zebra, ZBRA. Let's see what she's doing. ZBRA. This thing is getting smoked. That's the bottom line. Let's see what they does. ZB. So Zebra has just gone. ZB. This thing went from 110 bucks. It's down $19. Okay, they design, manufacture mobile computers, advanced data capture, personal identification, and well, what a mess this is. Okay, so this comes off a high of 119. You're at 90 bucks. You get monster volume, and this thing's in trouble. Yeah, you bring this back a bit, and what you're going to see, this was a one-way ride, $40 to $100. But now what you have is that when this showed its strength going topside, probably just finished an ABC up. Now you get huge volume on the way down, and that's problematic period inside that whole deal. And just to give you some idea about the percentage moves up versus down, what has been happening also in the last 6 weeks, folks, is that every time that we're down, the percentage moves are huge. Like you got Zebra down 17%, World Acceptance Corporation is down 37%. My God, Priceline's down. That's only down 6%. China Southern Airlines is down 18%. Accent Capital Group's down 21%. Now here's the ups. Inside the ups, you got Alamos Gold is up 4%. WestJet Airlines up 2%. Silver Standard's up 5%. I have no idea how Silver Standard even just keeps staying in business. That is maybe the. Let me just see something. Just maybe. I don't think this. I think they're still not producing. That's been a company that's been out there forever, not producing. The bottom line is up right now, though. You got Centerra Gold is up by 2.5%. You know, so what I do expect you're going to see, though, here, folks, is more selling as we go out through the day. You know, the plan is kind of in place right now. What you have had, if you look at the NQs, the NQs have tried to get positive 3 separate times today. Each and every time you have a seller that's in there, and that seller is overwhelming the marketplace. You know, your first expansion up was a decent one. You know, we went from 34 all the way up to 63. Gave it up again. Now, what the Qs, I mean, what the NQs want to do, they're going after they're going to break out these lows. You know, with the DAX being down almost 2.5%, 3%. Bottom line, folks, is that our NASDAQ's only down 0.6%. You're going to see that NASDAQ down over 1%. I suspect the S&Ps will also be down 1%. They're only down 0.6% right now. You stay right there. Our man, Mr. Basil Chapman's going to be coming up next, growling and prowling with you. And we got Darryl Martin, Steve Rhodes, Dave White, myself, and then our man, Mr. Andy Heck. Have a great one. Have a safe one, folks. Look forward to speaking to you this afternoon. Go get them, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.